Bitcoin is set to explode. Get ready for your portfolio to 3x, 5x, some of your positions to 10x, 50x, and 100x, because when Bitcoin explodes, it takes the whole market with it. So today, we are going to cover the case why we look like we're coming towards an end of a Bitcoin correction. We will get a reversal and then make all-time new highs, hitting that six-figure Bitcoin, which will lift the entire crypto market with it. If you like today's content, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I used to focus only on currencies, but now exclusive on cryptocurrency. So let's dive straight in. Now remember, we can only do probabilities and never certainties. But right now, Bitcoin has been going through this very deep correction. We know that, right? And your whole portfolio is probably down. So you're probably thinking, hang on, how can we get so bullish when Bitcoin is looking so bearish? Well, first of all, we did a video on, when was this video? This one was on November 22nd. November 22nd, and guess what? We projected this psychology of buying and selling with Bitcoin back in November, where we was anticipating a 5-wave sequence to the downside. So we anticipated this. This is where the price was, but we anticipated this movement. We drew it in advance in this price zone. And guess what? It's panned out that way very, very nicely. So we're going to dive in deeper with this. And by the way, we're going to cover a lot of Elliott Wave and Fibonacci, the psychology of buying and selling. And it happens again and again with crypto, with Bitcoin. And if you want to learn it, take my free Elliott Wave and Fibonacci masterclass. It's in the link below, and I'll show you how to do this for yourself with your entire portfolio. So now let's get rid of this. Let's get rid of this annotation. Bump, bump. I did another video also back in, when was this one? This one was December 15th. And again, similar thing where we said, look, the Bitcoin price is, the Bitcoin price is coming down, but we're likely to see a deeper correction. We're going to dive into the theory and the practical of this, because if you can understand this, this is where the biggest opportunity of probably the entire bull market is going to occur, when everything, there's fear, there's uncertainty, there's doubt, there's pessimism. And when everyone is selling, often that can be the best time to buy when it's coming towards the end of a trend reversal. So we're going to come trying to pinpoint when is it likely in terms of time and price and what you should be looking to do. But remember, always proper risk management, because we can only do probabilities and never certainties. Because if this occurs, what will tend to occur next is an upside movement. But we're going to cover a bit more detail on that in a second. So before we dive into the live chart, into this chart in a bit more depth, I just wanted to kind of remind ourselves of a couple of things. Firstly, let's just jump into this, because just quick reminder of where do we think we are with Bitcoin right now. Well, with Bitcoin right now, we've seen this a nice wave 1, wave 2. We've had this incredible 2021 of a wave 3. And what I believe we're in right now from a psychology of buying and selling, and if you haven't taken my classes and my courses yet, the market moves in these predictable fashion. This what we're seeing here, you'll see, I did a video yesterday with Decentraland, and it was just textbook. This movement to the upside, this wave 2, which normally breaks down into a 3-wave ABC sequence, this wave 3, which is often the most impulsive in most financial markets, 1, 2, 3, 4, 5, and we've seen a nice clean version of that. And then next up, what we tend to have is an ABC correction of a wave 4. Now with Bitcoin, what I believe, my thesis is that we're in this area of profit taking. Wave 4 is a classic profit taking wave. And we want to be aware of that. Natural, healthy market movements, not only in crypto, but in all markets. So there's this is called an ABC correction, ABC running correction. I just wanted to break this down for you, because I think this is the one that we're going to see. So there's different types of corrections that can occur. And wave A's are normally in 5 waves. They can be in 3. And this is what I'm talking about here. This wave A, I'm going to break this down in a bit more depth when we go into the live chart. Wave B, with a ABC running correction, I know it's slightly cut off at the top here. Wave B exceeds the extreme of a wave 5. So in Bitcoin, we've had this poke up above here with this part. And then what we tend to see with a ABC running correction is this movement to the downside, where it breaks down into 5 waves, 1, 2, 3, 4, 5. That's what I believe we're seeing in Bitcoin right now. And it does not exceed the previous low. and then it has a continuation to the upside. And that's what I think we're going to see with Bitcoin over the coming weeks. And when we do, if we do get that trend reversal, it's going to bring the entire market up. And that's what we always see. And I always use Bitcoin as a macro indicator for the rest of the market. So now let's just actually just dive into this, right? So this is my thinking. I did a deeper video on this, comparing it to the dollar index and everything else. So when we're looking at this, we're looking at a really big time frame. Let me just minimize myself a little here. Looking at a really big time frame. Again, looking at the theory of this, 1, 2, 3, 4, and then diving back in. And what we're talking about here, just so we're on the same page, is this wave 1. That was 2017. It's a really big macro picture we're looking at here. A wave 2, we had this incredible big run here. This was the coronavirus pandemic over here, and then we just drove right the way up, all-time new highs. Big part of this thinking is initially I was thinking this would be the wave 4 correction. However, what happened, this is important to note, really, really important to note. Corrections tend to be there's a particular wave structure, but here this is impulsive to the downside. This is a 5-wave structure. So actually this looks like a wave A, and what we're talking about a wave A is it's this part here. Again, this is important to note because we're talking about this part of the market here, this wave A here. Then we've had this wave B. This is a typical wave B, but what we look like we have with Bitcoin is more of this wave B kind of structure, where the wave B, let me just get rid of this, it has gone like this, right? This is like a nice A, B, C of a wave B. That's what I'm going to talk about now because it's exceeded the previous high, but now we're looking like we're forming this structure here with Bitcoin. Really, really important. I can't emphasize it enough. It doesn't mean it's going to pan out like this. It just means it's highly probable. And if it does, it means there's going to be a lot of undervalued cryptos right now. And you've heard about them, whether it's Cross Wallet, Cross Swap, Astro Swap, you're looking at even Decentraland's pullback. We're probably going to see some other cryptos pulling back also. There's some big, even all the launch pads are significantly down right now because of these conditions. So we're going to have a window of opportunity, and we get a few of them in a bull market, a window of opportunity, which is down here where everything is undervalued. We saw it when this happened as well. When this happened as well, we had a window of opportunity where a lot of great projects were undervalued, mainly because of fear, uncertainty, and doubt and pessimism in the market. So now let's just do a real nice view on this. So again, this is what we're referring to as a potential wave B. And again, why? Because look at this A, B, C structure. That's what we're talking about here. This over here. Again, I'm looping back and forth just because sometimes I know I'm speaking fast, but we're talking about this A, B, C structure above the previous wave 5 high, right? Hopefully that makes sense. Let me see how that shows on this. We're talking about this over here, like this, right? Hopefully you can kind of see that. We're talking about the theory and the practical, right? What's in the classroom and then what's happening in real life, right? And then we're talking about this structure on the way down. So let's get rid of this. This here, this structure. What does this look like? Let's get this arrow. What does this look like? Well, we drew this in advance. Look at this. We drew this in advance way back in, was it November 22nd? That this is what we're anticipating, a wave 4 low down here. And it looks like it's panning out that way. So let's now do some analysis on Bitcoin. And then we're going to do some numbers on the importance, risk, reward. If you buy too early and the price moves down, there's some risk associated. But also, if you manage to buy at 2 cents rather than 5 cents, that can make a significant difference. So I just want to run some of those numbers through with you as well. So let's just, first of all, focus on wave 4, right? Wave 4 macro. What I'm talking about wave 4 is this here. This here. And I know it's peaked over here, but this is what we're talking about, wave 4. Typical wave 4s, there's a particular ratio. I cover these in my courses and in the masterclass. Again, it's in the link below. Let me just do it like this. Let me just move this up. Is if we measure this wave, what we're calling a wave 3, typical wave 4 is between 38 to 50% retracement. So that's these two over here, 38 to 50. Let's just get rid of this one because that one's quite deep. 62% is the typical maximum, but it's typically this range over here. these two lines. You know, this is where we expect it to correct. And we said this back in April. In fact, I'm going to show you this. I'm going to show you this. Did I say this? Yeah, I did say this. I'm just going to show you this. This is important. Very, very important. My first ever video done on YouTube, if we just scroll down, done quite a few videos now, is because we said this in advance, is panned out longer from a time perspective, but from a price perspective, geez, I've done a lot of videos, isn't it? Here we go, this one here. I think I covered it a bit clearer. Let's show it in the first. This is my first ever YouTube video. It only got 228 views. 228 views. But look what we did. This is what we said in advance. This is what we were saying back in April. Back in April, people thought I was crazy, but we had this high over here, which is what we're referring to as this high over here. This high over here. In fact, we can do it like this. Let's do it like this. Let's draw it like this, right? Just for the fun of it, because I'm trying to get across to you how powerful Elliott Wave and Fibonacci can be, right? So we're going to jump back into this video, right? We said this here, but look how it's panned out. What we said was in advance. This is back in April. That what happens after a wave 3 is a wave 4 A, B, C style correction. Again, we was anticipating in around the 42. We don't know how it's going to pan out exactly, yeah, but we know more often than not this structure occurs. And then when we look at the live chart, what we're looking at here, if I can kind of zoom it in like this to kind of get it at the same degree, is it looks like it's panning out, you know, almost textbook, because what we're talking about here is really this as the A, this as the B. Is a particular type of ABC correction. There's mainly 4 types of ABC correction. This is called a running ABC correction because it peaks over the top, which is unusual, but it is one of the outcomes. And then this is what we were referring to as the ABC. But again, we did this in April. So I just wanted to kind of clarify how powerful that this can be. But now let's just forget about the past. Let's just now focus on the present. We got all well and good, Jagir. Great. But what's likely to occur next based on probabilities, right? So we've got this. Let's just get rid of this. Let's just zoom back in here. So we've got this range over here. These are the broad retracements. That's on a macro picture. Now we're going to move into our intermediate wave count. What does that mean? Intermediate wave count. So the macro is a wave 4. Intermediate is an A, B, C. Right? So we're going to measure this wave A and project it down from this because wave A and wave C often have a direct relationship. So watch this. We're going to measure this wave A, which fell into a 5-wave sequence, and we're going to project it from the top of this, what we're calling as a potential wave B high. And the main ratio is 100%. 100% of that, and the minimum is 62%. But we've exceeded that already, so 100% is going to be the key one. And you can see it clusters over the 50% retracement, which is the previous line, this one down here. But also note that the 100% doesn't go below the wave A, which is part of the case, part of the thesis, part of the thinking that we may get an ABC running correction. That's what we're you know, we don't want to forecast too much, but that's what it looks like is occurring. So we've got that. So we've got retracement and we've got an alternate price projection or a wave extension. In TradingView, they call it, what do they call it? They call it a trend-based fib extension. Trend-based fib extension, right? That's what this 100% is. Now we're also going to look at what we're going to do is I want to do some time. I just want to think. There was one other thing I wanted to do. This wave structure is not that clear. What we can, it's relatively clear. Like this is really clear. This 1, 2, 3, 4, 5, right? That's pretty clear. Here, we don't need to get overly pedantic about, is this a wave 1 or is this a wave 1? What we can see is it's probably a wave 1, 2. This looks like a really clear 3 now that this part has exceeded this previous low. This looks like a wave 4, and this looks like we're forming the final part of a wave 5. So what we can do here, this is going to be very, very important for us. You know, a wave 1, a wave 2. This looks like a nice clean wave 4 now over here. And it looks like we're forming toward the end of a wave 5, right? And if I just draw it like this, so you can just see it very clearly, like a 5-wave structure. But why am I drawing that is because we can now go into a microwave count. What do I mean by micro? So macro is wave 4, intermediate is A, B, C of a wave 4. So this is an intermediate wave count as an ABC. But then when we go into the wave C itself and it breaks down into a 1, 2, 3, 4, 5, that's micro. So now what we're looking for is multiple degrees of wave counts that are pointing at the same thing. And if they all line up, it just makes it more highly probable. So what we're looking at is just probabilities, never certainties. So if we just now focus on this structure here, let's just do it like this for now. What we're looking at, the typical end of wave 5 price target is, I'm gonna show you like this, measure wave 1 to 3, and we're gonna project it forward from wave 4 like this, right? We measure wave 1 to 3 and project it forward from wave 4. And the two ratios is 62% to 100% of wave 1 to 3, where the end of a wave 5 typically occurs, right? So that's what we're gonna do here. That's what I'm doing here. I'm gonna use this particular tool. We're going to measure wave 1 to 3, 2 clicks there, and we're going to click it from the top of wave 4, bang, and we want the ratios. The two numbers that we want is 62% and 100%, right? So I'm going to just do this. So you'll see now we've got these two numbers over here. We got this one down here, you can see it overlapping, and this one. So this one's the key one that we really, really want. So just to keep it clean, we can ignore that one there, bang. Another thing to keep in mind is the external retracement, but we're not going to go into that too much. What I want to know is this is a sub-micro count. This often breaks down to a 5-wave sequence, but we're not going to do that today. What we're just going to look at is now we have this price zone that says this is the high probability end of a wave 5, of a wave C, of a wave 4. If it turns out to be the case, it is going to be very significant for the entire crypto market, because what typically happens after a wave 4, a wave C of a wave 4, and there's a few other things that are mapping to this also, is a continuation, a wave 5 continuation, right? A continuation to the upside, right? That's what we're anticipating. Now, if Bitcoin exceeds the all-time high being, closing price anyway around $68,000, give or take, it's going to lift the entire crypto market. But we're going to do one more thing here. One more thing. We're going to look at a bit of time analysis. You go time analysis. Time analysis. Two things we want to look at for this. And then we're going to look at two scenarios after this as well, because we need to prepare ourselves for worst case and best case. All right, first what we're going to do, we're going to look at the macro time. We're going to see back in 2017, or to end of 2017 into like December 2018, how long did it take for us to form this correction, this wave 2? And now often wave 4 takes the same amount of time as a wave 2, right? So we're going to project it forward. This is time analysis. I know most people don't know about time analysis. This is big time. This is very, very, very powerful. So we're going to now just click. We're going to use this tool just in case you wanted to do it. It's where is it? What do they call it on this? It's called trend-based fib time. Trend-based fib time. We're going to measure this wave 1 to wave 2. No, I need to click on it again. Wave 1. So to get it as precise as I can, to wave 2. And we're going to project it forward from what we're anticipating to be this wave 3 high. Bang. Right. So this tells us in this range is wave 2. Minimum tends to be 62% to 100%. So we know we're in that range, right? In that range. So and that coincides. Next, what we're going to do as time analysis is we are going to measure. Let's just get rid of this. I'm doing it like this because there's logic to this. There's, and you can apply this to other cryptos. How long it took to form this wave A, we're going to measure. So we're going to measure it like this. And then we're going to project it forward from this wave B, right? And this tool, again, allows us to do it nice and easily. We're going to project the wave A, and then project it forward from this wave B high. Because wave C and wave A are often Very similar. And what I mean by that is they're similar in terms of time and price. Let me just make sure. Just double click on this. So this is this one here. This is what we're referring to as how long it took the wave A to form, and we're fast approaching it's like mid Feb over here, right? But we want to narrow it down even more. There's a couple of other things that we want to do, but again, 62 to 100%. So we're in that range. So now all of a sudden, because we've surpassed this, we can kind of get rid of this. Let's just keep it nice and clean. I know this is relatively wide, between now and April, but here is a bit more narrow. So I like to keep it as narrow as I can. But then what we're looking for is a confluence of events. Confluence of events meaning we've got momentum, we've got pattern. Pattern we have ABC 1, 2, 3, 4, 5. So we've got pattern, Fibonacci, price. So we've got this retracement, Fib extensions. They are coinciding. Also, another thing to keep in mind, which most people don't realize, is most wave fours end in the previous wave four. Oh, what the heck are you going on about, Jagir? What are you going on about, Jagir? What do you mean previous wave four? All right, previous wave four of the previous wave, which is wave three. We had this wave three, but within that wave three, we had a wave four, right, which is down here. Very valuable information. Why, if you know this, macro wave fours on the next bigger wave four tends to end in the range of the previous wave four. So you go, what? All right, here we go. It is from this high to this low is the previous wave four, right? So that's another confluence of events to say, okay, price is fast approaching that zone. Wave A went in that zone, but this is also in that zone as well. So we got that information. Let me just get rid of this and get rid of that. Yep. We can get rid of this as well. And then last but not least, let's have a look. Bump, bump. We got that. Yeah, last one I wanted to do was the wave 2 price. You go, okay, what am I going on about now? All right, wave 2, we're going to measure wave 2. This is advanced technical analysis, so I'm not keeping it that simple, but it's just because it's potentially a very crucial time for Bitcoin. And if you get it right, it can change your life. So, we're talking monetary, right? Financial health, no, only probabilities, never certainties. So look, it's in that zone again, maximum, measuring wave 2 and then projecting it for the wave 4 from the wave 3 high is 1.618, right? So that's in that zone again. It just gives another cluster, another confluence of events. So what's the score over here? All right. I'm hoping that made sense, right? I'm basically, to put it in layman's terms, this is the theory, right? Get it? So this is the theory. Profit taking for wave 4 typically is A, and in our case, is a B that exceeds the previous high, and then a wave C that doesn't exceed the previous low. Is a particular type of ABC correction, which is what we're calling the running correction, ABC running correction. And what we're saying in practical terms is this is what the market seems to be doing. It seems to have made this, again, if I draw it to the same scale, it seems to be doing this A, B, C correction, right? So that's basically the summary of what I'm going on about, right? And then what tends to occur, again, if we go into the theory side, what tends to occur next is a continuation of the bull trend for a wave 5, right? That's what we're talking about. So then when we go into a life chart, that's what we're talking about. We're talking about a continuation. And when Bitcoin starts making all-time new highs, everything tends to move in that direction, right? Again, probabilities, never certainties, do your own proper risk management and everything else. Whew, okay, we covered a lot. I know. But it's valuable, and it's important, So what I wanted to cover next, and just to finish up this video, is a bit of numbers, just numbers, right? Those that know me, I got a degree in mathematics, but we don't need degree level math. I used to be a teacher of mathematics in secondary school, qualified to teach up to A level, But we don't need A-level math. We just need simple addition, simple multiplication, and just keeping it really, really simple. So what we're going to do, I'm just going to make some notes. I just want to get this really, really clear because we're looking at some projects, right? You know, I'm a fan of cross-swap, cross-wallet, swaps, Astro, Bluezilla ecosystems, IDOs. There's a lot of IDOs that have launched in the last 3-4 months that are significantly down. You know, I'm a fan of launchpads. They are significantly down, 50%, 60%, 70%, 80%, and so on and so forth. But that's just market conditions. It's short-term voting. It's fear, uncertainty, and doubt. It's pessimism. It's profit taking. It's just is what it is. You know, if you're new to it, it's like welcome to crypto. It's a crypto land. Get a 10x overnight, but then your position size can also drop by 50%. It's very volatile. So what I wanted to do, just to finish this video, is get my thinking really, really clear, right? Buying at, let's just call it 0.05 versus 10 cents, right? Just hear me out on this. This is important, really, really important. Because ultimately we're looking to increase our financial health. We're looking to basically make money, right? Make money. And there's certain things that make a big difference. And there's pros and cons to each. And this is what I want to just kind of finish today's video on. So there's two ways of doing this. You can act as a venture capitalist, which means you're a bit more comfortable with more risk, but you know there's more upside potential. Or you can act more like a trader, wait for confirmation, knowing that there might be less returns, but at the same time, there's also less risk. So you have to kind of make that judgment call yourself. So what we're going to do is, again, just get the practical side of this. Excuse me. I'm back in the UK, by the way, people. I was stuck in Dubai for a while because I had to isolate. I was traveling there. I had COVID, and then fully recovered now. So I'm back in the UK. Anyway, I was just thinking about my tickly throat. All right. So let's go on the conservative side first. So let's just say you're not comfortable buying whilst Bitcoin is dipping. So you go, I need a bit more confirmation. All right, what you need, or what you want to wait for then is a break of the swing high. This is the immediate swing high. This is the major swing high. And obviously we don't want to wait this long, but this is the all-time high of Bitcoin. So if and when Bitcoin breaks this high over here, this high over here, basically this over here, that's the first major indicator that we've got the trend reversal and potentially the move to the upside. There's a caveat to it also. We need to look at the worst case scenario. If that's wrong, and we might move into something called a complex correction. I know. It just is what it is, right? We'll go into that in a second. So let me just go here. I'm just gonna make a note because otherwise I might forget. Let me just write complex ABC. Let me try this. So this is for my reference because there's a point that I want to make sure I cover with you guys. All right, so we want the calculator, right? So let's just go back into this. All right, so let's just forget what the project is. We don't know what it is, right? We don't know what it is right now. We're just kind of just saying, let's just say we bought a token. Let's just call it a token. And let me do it like this. So bear with me. It's going to be worth the wait. I promise you. All right, so we buy it at 5 cents, right? And let's just say the price of the token gets to, let's just say $2, Let's say $2, right? $2. Right, price of the token, let's say everything takes off, and whatever the token is at 5 cents today, and it gets to $2 in 3 months, right? 3 months. And then what we want is example 1 and example 2, right? So let's just do it like this. Let's just go example 1 and then example 2, right? So to go from, because sometimes, buying at 5 cents and 10 cents might not seem that much difference. Often it's actually more like this. It's more like 1 cent and 2 cent. Right? It seems like it's roughly the same, right? It's only 1 cent and 2 cent. How much of a difference can it make? In fact, I want to do, I want to do one more. I'm going to do it like this. Bear with me with this. This is important. Example 3. And let's just say 3 cents as well. Or let's say 4 cents. Because sometimes the difference of a day, difference of an hour, difference of a minute can sometimes be very, very significant. So let's just say it gets to $2, right? $2. With this one, with 0.01, if you exited at $2 and you bought at 1 cent, you made a 200x, right? This one is 200x. If you bought at 2 cents and sold at $2, you've made a 100x. Now, both, we can't cry about any of those. That's just amazing returns, especially if you got a good position size. But then if you bought at 4 cents, that's 50x. Right? If we just want to double check our math, $2 divided by 0.04 is 50x, right? All of these are amazing, right? All of them are amazing. But look at the difference. Look at the difference. Yeah, and often 1 cent to 2 cent and 2 cent to 4 cent can be the difference of a day or a week. But someone could buy in the morning and someone else buys in the evening, and one person experiences a 200x and the other person experiences a 50x. So if someone invested $10,000, so let's just use 10K as a nice round number as the example. Well, this guy makes, what is it? So let's just do the math to all on the same page. He invests $10,000 and gets a 200x. He makes 2 million, right? So Joe over here makes 2 million. Bob, I know, makes 1 million. And hopefully all of them are happy bunnies because, it's good money. And then Mary makes 500K, right? But this is the point that I'm making, which is right now, things don't and won't feel comfortable buying. You don't feel comfortable buying. You won't feel comfortable buying because everything is down and could go down further, because the reverse is also true, which is, it could go down further. So you have to take that into account in your business plan. But VC thinking, or just a bit more high risk, is this model, waiting for the reversal and almost buying on the first pullback. You might be here, and then buying a bit later is over here. But then once the market really takes off, because look, if something's going to get to $2 from a cent or $2 from 4 cents, there's going to be a time it gets to 40 cents, right? And sometimes it can be a week or 2 weeks. It could be 7 days, 3 days, 2 days, just a bit of volume, especially if it's a low market cap. So what will happen is this, and we're gonna see this. We've seen it already this year. So there's no, this is highly, highly probable. Let me just do this. I'm just gonna do this. All right, what we're probably gonna see is the example 4. I'm just gonna do it like this. Example 4 is the price is 40 cents. And guess what? You have 1 cent buyers, you have 2 cent buyers, you have 4 cent buyers, and you have 40 cent buyers, because people buy at different stages. Some people don't touch anything that's not in the top 100 coins, and but the difference here is a 5x, right? And sometimes it's a difference of 1 week or 2 weeks or a month or sometimes a day, where one person's getting at 1 cent, one is at 2 cent, and one is 4 cent, and one is 40 cents. And the first person in example 1 gets their 200x, and the last guy in this example gets a 5x, right? 5x meaning they make 50K. Oh, I'm hoping this is making sense, right? So why am I going on about this? Well, right now we're on this very interesting part of the market. It is higher risk, don't get me wrong, but there's a lot of things that are down right now, but this is the area now of the first guy, right? Then when we get a bit more confirmation, will be the second guy, over here, and so on and so forth. All right. Okay, I want to wrap this up. Okay, let's just now finish on one last thing with the complex correction. Best practice is to assume you are wrong. So after a 5-wave sequence to the downside, I'm just going to get rid of all this now. Let's get rid of this. We can just have let's just keep the box. We'll keep the box. We'll get rid of this. We'll get rid of this as well. Okay, best practice is after a 5-wave sequence to the downside. So let's just say this Bitcoin does unfold like this. It has already 1, 2, 3, 4, 5. What you should anticipate, let's just make the assumption that it's going to make the low over here, right? We should anticipate a minimum of a 50% correction, right? In other words, rather than just assuming that the market's going to just continue and break all-time new highs, is actually better practice to assume it's only going to, as a minimum, going to do a 50% correction. Let me just do that again. Make sure I got the retracement tool. Bump, bump. Let's do it here. Bang. Bang. Yeah, 50%. Up to 62 to 78.6% retracement. And typically there's a ratio of time. Let's just do it from here. And the typical is 50%. Minimum is 32. So like this. Is if Bitcoin comes down to here, we should always anticipate a minimum of 3 waves. We don't know if this is a 1, 2, or an AB. And then a third wave here, something like this. Is where possible, if this occurs like this, just be mindful that you want to be ideally risk-free in this kind of zone, because the market can, sometimes does, continue to the downside. I'm not saying that's what we're expecting. We're expecting more highs, but just take the kind of caveat. So there you have it. All right, let's wrap up. So we got Bitcoin. It's making potentially textbook ABC running correction for a wave 4 with a continuation to the upside. If that's the case, then Bitcoin tends to take everything with it, and then we might see the final leg of the bull run over the course of the next 2, 3, 4, 5, 6 months, give or take. But if we do make all-time new highs, which means breaking this high over here, then we'll reevaluate the market and kind of see when we can project what's the likely end of a wave 5 of this whole amazing run. So there you have it. If you like today's video, like, subscribe, hit the bell notification. It's a special one. Back in the UK, I arrived last night. Yes. So I'm happy to be back. But let's finish on a quote today. By the way, if you want to learn how to do that stuff, just take my free Elliott Wave and Fibonacci masterclass. Is in the link below. So today's quote, the quote of the day, I got my book back. Yes, I've been running off the cuff before when I was doing videos whilst I was in Dubai. All right, you must be in it to win it. Yes, one of my favorite quotes, Michael Jordan. I've missed more than 9,000 shots in my career. I've lost almost 300 games. 26 times I've been trusted to take the game-winning shot and missed. I've failed over and over and over again in my life, and that is why I succeed. Why do I say that? Why did I choose this one today? Well, the last, 2 months? 2 months or so? 2 months? It's been tough for many of you. I've been reading your comments in my private Telegram group. People that buy one of my courses, they get invited to my private Telegram, and we're going to do we're going to restart our workshops this week as well. So just heads up for you guys is markets are down. And some people, you may have just started crypto in the last 2 months or between April and now and experienced this bearish part of the market. But you should be learning. So it's okay to miss. It's okay to fail as long as you are always improving and sharpening your axe. And Michael Jordan was one of the greatest, some say the greatest of all time when it came to basketball. And as an athlete, he changed the game. It was beyond the sport itself. But he went through hard times. It weren't just winning. And that's the same as trading, investing, retail venture capital, IDOs, and everything else. So keep learning, keep practicing, doing what you're doing, but anticipate the minimum. And let's also get ready for what we might get as a major trend reversal over the coming weeks. And if we do, it's going to pick up the whole markets. But again, get those numbers right. The difference between buying at 1 cent, 2 cent, 5 cent, 20 cent, 40 cents. It makes a big difference when it comes to your exit in the next 3 to 6 months. All right, like, subscribe, hit the bell notification, and I'll see you soon.